Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
We want to take a look now at some of the stocks on the move. Lisa Mateo here, joined by Alexis Christoforous, and we're joined now by Bloomberg's Christine Aquino. Christine, we've got to start with Dell because their share's down 10%. So not some good news from Dell.
Yeah, absolutely, Lisa. Dell, ticker DLL, really taking a blow here in terms of share move this morning. And that is because we did get a look at their second quarter results. So the headline there is the slower AI server orders. They booked $5.6 billion for this period versus $12.1 billion in a previous period. Also, operating margin missed estimates, 8.8%, below the estimate for 10.3%. So shareholders are definitely looking at those things as negatives. The silver lining, though, is that the company did boost its annual outlook and posted quarterly sales and profit that topped estimates. But it's really those AI server orders that are getting investors down. And JP Morgan saying that the improvement in the margin trajectory that the company is flagging will be an important watch point, but the robust revenue raise to the full year and the outlook for the server revenues could be something that will help shore out their growth outlook in the medium term.
Christine, want to talk a little Caterpillar because it too is getting beaten up today, down about 3%. Looks like those tariffs are really taking a bite out of the bottom line.
Absolutely, Alexis. The Caterpillar ticker CAT extending those opening declines that, as you mentioned, down more than 3% at the moment is all about tariffs. So the company is now warning that there will be a cost of as much as $1.8 billion for the full year to the company from the impact of tariffs. And then incremental tariff impact is expected to be around $500 million to $600 million in the third quarter. So Bloomberg Intelligence actually flagging that the update suggests tariffs will be a bigger drag on profit than previously anticipated. But the upside is they're still thinking that earnings will bottom this year and that the revised outlook will imply that operating margin will be near the bottom of its target range.
You have no good news for us. Ulta's down too.
I'm so sorry. It's a dreary Friday.
Are just people not spending on the beauty as much anymore?
Yeah, absolutely, Lisa. So the next stock I want to talk about is Ulta, of course, ticker ULTA. That too is down. Shares now extending declines actually more than 4% at the moment. So it's funny because they did raise their sales outlook. They're saying that fiscal 2025 sales will be $12 billion to $12.1 billion, which is up from their previous forecast of $11.7 billion. The kicker, though, is that comm sales are expected to be flat or up by a low single-digit percentage versus 6.7% in the second quarter. So we did hear from Ulta's CFO, Chris Lialio, saying that it is prudent to take a cautious approach because of uncertainty around consumer spending. And that jives with what we've heard from the University of Michigan Sentiment Survey, for instance, right? Like there is just a lot of caution around the potential for higher prices down the pipeline in the second half of this year. And of course, second half of the year also tends to be a heavier spending period because you have all the holidays that people are gearing up for. And so, yeah, maybe it is just a sense of prudence among customers in terms of what they spend money on. And maybe beauty is lower on the list.
I don't know. It's still high on my list. It's just me.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.